Now, as the record spins around, you recognize this sound. Well, it's the underground. You know that we're down with what you like, with what you like.
And though we're usually on a serious tip, check it out. Tonight we're gonna flip and trip and let it all hang out tonight. We're gonna say what we like.
Cause yo, we wanna know how many people in the flow would like to just let yourselves go and do what you like. Yeah, what's tonight's your night? Just eat food, try not to be crude or rude. Kill the attitude, chill the serious mood and do what you like. And do what you like. Everybody do what you like. Yeah, do what you like. Just do what you like. Yo, go where you like. I mean, rich, poor, high, lower, upper, middle class. Let's all get together and have a.
Hey, it's Soleil, and this is episode 394 of the Orange Pill Investor. And I want to talk about real Bitcoiners for a second. And there's a little bit of what's the word? Not resistance. There's a little bit of like animosity, I suppose. What's up, deeply? Towards anybody who doesn't just live life like a monk, eat gruel that's basically like from the Matrix movie, that bowl of just protein and stack sats. And if you dare to spend money, I don't know, on a second chair, or God forbid, invest in a company that you believe in, then you're not a real Bitcoiner. And I think that the never sell your Bitcoin gets misunderstood a little bit. And for me, the ultimate purpose of Bitcoin, and probably why I was so attracted to it when I think I probably came close to understanding it fairly well, was that as a card carrying member of the Proud Crypto Anarchist Society, I had kind of been, you know, wishing and hoping and having my fingers crossed for the opportunity to actually just live as a free person. And that might actually finally be possible if Bitcoin can continue to just chip away at the world. We like to say that Bitcoin fixes everything, or Bitcoin fixes this, Bitcoin fixes that. And so now I'm just kind of just trying to live long enough to maybe get a glimpse of that. But if Bitcoin does allow people to just live in the free market and do whatever you think is best with your life and your time, then there are going to be movements or pursuits that are more valuable than the Bitcoin. At a very basic level, you're still going to want to buy food. So if we get hyper Bitcoinization and all of the fiat dollars somehow magically were pushed out of existence, or just marginalized to the point of insignificance, then the Bitcoin becomes the circular economy. And you can't just never sell it. We can quibble about the semantics. We could call it spending, right? You can say, okay, well, I know I don't sell my Bitcoin just for fiat cash, but I'll spend it for food and shelter. And then if you come along, somebody says, hey, You want to invest in this company, they've got a promising cure for cancer. Like, who wouldn't? Who wouldn't come off of their sats for something like that, right? And, there could be 100 companies all trying to get the same thing, and maybe one of the 99 that you invest in doesn't do anything and goes out of business, and the one out of 100, finally does it, and we get a cure for every single cancer with this one pill or whatever. Might be gene therapy or something. Like, it's okay that people invest in things that go belly up and the free market decides that the one out of 100 is the winner, and anybody who picked the winner is going to end up getting more Bitcoin back than they invested, and the other 99 are gonna lose more Bitcoin than they get back, and that's basically what the free market is supposed to do, and you don't suddenly lose your Bitcoin creds, your street creds, if you're investing in companies that are building the world, like, or you could use that are upgrading the world in to the type of world that you wanna live in. And the way that Jeff Booth describes it with his, I'm not getting paid to hype his company, but, Ego Death Capital, I believe is what it's called, is that when you build a business on Bitcoin, you are potentially exposing yourselves to venture type returns on a venture type asset. So you can just invest in Bitcoin and get whatever Bitcoin's CAGR is for the next 50 years, and that's fine. But if the company that cures cancer also stacks sats, then the the Bitcoin price of their assets is the floor of the value of the company, and then the ceiling is how many sats everyone on the entire planet with cancer is willing to shell out for the treatment, which, if it's a serious enough cancer, it's probably all of them, which you would hope it would be at least reasonably priced. But, you know, if I was terminal and they're like, oh, yeah, we can just cure you and you're good to go. And the price that they set was all my sats, I'd be like, all right, cool. If you're going to let me live another 20, 30 years, I can go earn more sats. I can go do something productive. So that's an extreme example. And so MicroStrategy to me is a reasonable, ethical investment. And some people will say, oh, okay, well, it's only fair and square if you're using your retirement account and you can't invest in Bitcoin. And that just shit doesn't make any sense to me. Like freedom money, it's like they want to attach these restrictions to freedom money. And while I get the point that if you're just selling your Bitcoin because you think it might go down, and then you're just gonna sit in cash in a melting ice cube, I can go along with that argument to a certain extent. But strategy is pumping, to use Jesse Myers's metaphor. They're a pump from the bond market into Bitcoin. And so it's fast tracking Bitcoin adoption in the financial market. And to me, that has to be an admirable activity. And by investing in strategy, I can be exposed to their floor, which is 500 and something freaking thousand Bitcoin. So I like that already. And if they can continue to leverage and, get more Bitcoin and start siphoning as much of the bond market as possible, that's just even better for the world. If it was just, if it was just me screwing around and like trying to trade Walmart for Walgreens or something ridiculous, then that probably doesn't cut it. I could probably say, "Oh yeah, you're selling your Bitcoin for Walmart, and Walmart doesn't own any Bitcoin." Like that's I guess I can get on board with that. But as long as strategy continues to intelligently leverage their portfolio, then I'm on the strategy train. I'm on the hype train, I guess is what I'm saying. And I don't think that like threatens my my Bitcoin card in any way, right? Like the Bitcoin police aren't going to come and make me take the fucking laser eyes off my profile pic. But I guess there's a lot of argument now about people, if you own some MSTY or you own some IMST or you own some strategy, you're not a real Bitcoiner anymore. And I haven't run the numbers, but I suspect so strategy is a leveraged play. And we're gonna ignore the self-sovereign, no third party risk aspect of Bitcoin. So clearly Bitcoin is the the alpha dog and it's sovereign money. But strategy is a leveraged play on that sovereign money. And so, the returns, and you can, even if you don't want to measure things in fiat dollars, like if you want to measure how many eggs or how many houses you'll be able to buy with a strategy investment compared to a Bitcoin investment, as long as strategy continues to intelligently leverage, their cash, then strategy is going to give you, you know, more cartons of eggs, more, more cars, more whatever, more dinners out and movies or whatnot. MSTY as a convenience is going to do a bunch of trading for you to provide income. And so I suspect it will underperform just holding strategy by itself. But if freedom and time savings is a measurement of being a free person, then generating some income and transferring that responsibility over to MSTY potentially makes sense. But I think it's pretty clear that it won't perform as well as just holding strategy itself unless you reinvest all of the dividends back into MSTY, which kind of defeats the purpose of generating the income that you can spend in the first place. But it remains to be seen whether investing in something like MSTY, let's say it's suboptimal to strategy, just holding shares, is it still giving higher returns than Bitcoin itself? And I think the answer to that is probably yes, but I don't know. I haven't run the numbers. And that's assuming that the 10% that they've been giving for the last year or so will continue into perpetuity. And now we've got IMST, and I added them to the covered call challenge. I think they're going to try to build a little bit more upside into it, but the screenshot that I saw of their holdings, and I don't know, maybe they've had them on for a couple of weeks. Maybe they opened those at 30 days, but I think those were expiring this week or next week, so it wasn't really like longer duration, and the strikes weren't that high really either. It wasn't capturing too terribly much upside. So I need to do a side by side comparison with Misty and IMST to see which one's capturing more upside versus premium. MSTY does seem very laser focused on just the premium. So I'm not sure if the only two difference between those funds is just going to be the strikes that they're selecting, or if it's going to be like days to expiration as well. So I need to jump into that, but I guess it's starting to ruffle my feathers a little bit listening to all the self-proclaimed true Bitcoiners uh, shitting on people who are spending their Bitcoin on whatever the fuck they want to spend their Bitcoin on, especially when the things that they're spending their Bitcoin on are still good for Bitcoin. Now, I think if strategy got to like 2 million, that might start to worry me a little bit because that would be about 10% of the supply in one place. And then, unless they had that distributed amongst like 10 different custodians, then that would be a little bit too tempting, I think, for hackers or, bad actors to try to access that honeypot. Um, I don't know. Was it how many Horcruxes were there? 7? Maybe you got to find seven different third party custodians to to live forever and make sure that make sure that if one honeypot is hacked, you still got 6 Horcruxes left. Maybe I just need to finish watching the Harry Potter movies again. They have an excellent voice actor for those books, by the way, in case anybody likes audio. All right. So I don't think I'm gonna waste any more time on that. Let's check the chats and see if anybody is calling me a fake Bitcoiner. What's up, Waffle Goblin? Real Bitcoiner monkness is for 2017 hodlers. The 2020 plus Bitcoiners we still need to earn to stack. Yeah, exactly. All right, dude face. The purity test is one thing. The other argument they have is any risk alternate to just stacking has trade-offs. Know the risks and proceed with caution. Yeah, exactly. I don't know if Thomas Sowell is a Bitcoiner, but he may as well be with the I his quote that I love repeating the most is there are no solutions, only trade-offs. What's up, Brandon? Sid says most of them bought last week. Other Brandon, I have a question. Is it recommended to close covered call positions at 21 days expiration, even if you're upside down? You'll need to check and see if the roll makes sense. If you can roll for a small credit, then I think you can absolutely do that. If you can roll and break even and potentially roll your strikes up, that might also be a win because you're just you're just rolling it out, for no credit or no debit, but you're exposing yourself to more upside. So if you can get a credit or you can roll the strikes up for more upside if you think the price is going up, I think either of those are a win. And let's just see if I'm in that scenario. I don't have anything that's 25 days there. I might in this account. Nope. Nope. Yeah, I think I rolled all my 25s out. Um, but I have some that are upside down. So let's just pretend that this was 20 21 days to expiration, anywhere, 21 to 25-ish. If I can roll this out to 45 to 50-ish, right? I can roll it out to the same strike for a tiny credit. I think that kind of makes sense. But if I wanted to roll this up, even just a couple of strikes, now I have to pay a debit. I don't think that makes sense unless unless this gets so far deep in the money that there's no extrinsic value left in here. But for now, it made sense in my mind to open this up at 45 days and get paid $785. Well, now with 7 less days, there's over twice as much extrinsic value in there. So doing nothing for another couple of weeks will get me even more extrinsic value than I originally sold it for. So buying this back for more than I sold it for kind of defeats the purpose. The only problem with holding it under 21 days is the gamma risk as expiration approaches starts to increase. And gamma risk is like, let's say we're, 2 days to expiration and our strike is the 310 or the 312. And if the price just goes up or down a dollar, it's like in the money, out of the money, in the money, out of the money. So all of the strikes around here have a ton of gamma risk because the thing can go in the money and the price of the option will skyrocket, meaning if you sold it, you'll have to buy it back for way more. Or it could go out of the money, and if you sold it, you're good to go. It expires worthless. So the price of the stock is going to just slam gamma around back and forth on you. And it's not technically a risk in the sense of you can get wrecked if you're selling calls against shares, because the worst thing that can happen is they get called away at a profit, right? As long as you chose a profitable strike to sell them for in the first place. But there is a little bit of a risk in that if you sold the 310 and the price goes to 350, then it's going to cost you $4,000 to roll that damn thing. And finding a strike where you can get $4,000 is probably going to be pretty hard unless you go out to like 45 days at the money. Yeah, you can't even get that at the money. So getting yourself into a situation like that can make it difficult to roll. But in general, I would say that when the price goes, start to get upside down on that, it becomes more attractive to sell that position. So why would I want to buy it back and roll it? But again, if you can roll it for a small credit, or if you can roll it to a more favorable strike, then absolutely go for it. But if you have to pay a debit, or you're talking about rolling it out to 45 days, like at the money, it's just to preserve that debit, then I don't think it really makes sense. I don't know. I guess this is where I have to say Not financial advice. Oh, most of them sold last week. Lambo good for Bitcoin, right? Yeah, I know it's funny that, the whole Lambo thing, but at some point, like, I don't necessarily know if I would buy a Lamborghini, but, was it Jay Leno's got like 50 cars or something stupid? I mean, if that's what you get enjoyment out of, and you just like, you got access to a racetrack and you can just go drive these things at 200 miles an hour and you just get so much enjoyment out of it, you should absolutely fucking buy a Lambo if that's what's gonna, make you happy. And I think the problem is people trying to define what other people's allowed happinesses are supposed to look like. Yeah, but I knew you were kidding. Let's see, Joshy. I like the Horcrux analogy. Yeah, yeah. I was talking to my son about it the other day, and we were gonna set up. He doesn't have much Bitcoin. We buy like $25 a week or something. And but I still went ahead and got him a cold storage device. But we ended up not setting it up right away just because I wasn't confident he'd have a safe place to store the seed phrase. And I didn't even want him to have the whole entire seed phrase stored in one physical location. So I don't know what people do that are doing, completely self custody are doing there. What I really like what somebody recommended to me, which is like, if you've got a 24-word phrase, you split it up into 3 parts, but not 8, 8, and 8. It's like 16, 16, and 16, and a third of the words overlap. And then if you can store those in 3 separate physical locations, then you only need to get 2 of 3 to have your full code. And, there's all kinds of weird shit to worry about. Like, I think they've got like mind reading and shit available now, right? I don't know if the CIA's been fucking working on that. So even like memorizing, you can memorize your brain wallet and take that from country to country, but like, is memorizing your seed phrase like a no-no now? Like somebody's gonna be remote viewing your fucking seed phrase from into your brain. I don't know how deep we need to go into this shit, but because we didn't have more than like 2 locations. We were trying to figure out a 3rd location that he could store the other part of his seed phrase. We kinda just he'll be moving soon after college and stuff too. So, kinda just kicked the can down the road for self-custody. And so for now, he's still got his Bitcoin sitting on exchange, which I know is a cardinal sin, but just it's a pain in the ass trying to do it well and correctly, and you wanna prevent yourself from getting $5 wrench attacked, but you have to protect yourself from yourself too. Like, I'd be willing to bet more people have just lost their own Bitcoin by losing the seed phrase or misplacing their fucking Bitcoin than all of the 5 wrench attacks combined. I bought a $50 wrench last year for some reason, and the damn thing weighs about 20 pounds. So that's my $5 wrench defense, is a $50 wrench. Dude Face says it starts with British Hodl's recent videos. He has been proclaiming Misty as his preferred income strategy for Bitcoin derivatives. Yeah. I know some people are like saying, "Oh, I don't have the expertise to sell covered calls." I mean, It's not hard. Um, if you want to sell a weekly, well, I should say it's not hard, but I mean, it's still going to take a little bit of time, but it's even at that, it's only like 30 minutes a week. You don't have to be in here an hour a freaking day making videos like I do, but 100 shares of strategy cost 310, you know, you want $200 and it's just you just pick one. Pick one that you don't mind your shares getting called away at that price. And if you're like, well, I don't want them called away at any price, okay, well then you're not generating income. You've got two choices. Do I want to generate income and put my shares at risk, or do I not want to put my shares at risk? But if you have made the decision, yeah, I'm willing to part with some strategy at any of these prices, then you just pick how much you want. How much of this premium do I want? Do you want $1,000 with $11 of call away value? Do I want 500 with 340? I think people think that, oh, I have to become a master of options to choose the right strike. Like there's no right strike. There's a trade-off with every single strike. You can do the weeklies, or you can just go out here. Some people just do the .3 delta. Hermes does the .1 delta. You can go to the expected move. This is Tasty Trade's expected move. They're thinking, somewhere between 380 and 245 is what strategy's price will be in 45 days. You can go to the expected move. You can go to one standard deviation. You can go to the .2 delta. It doesn't really matter as long as the amount of premium that you're collecting meets your income needs and whether the upside strike is compatible with your upside. You don't mind selling at 380 in 45 days? Okay, this is a winner. So it's really that simple. And I think people make selling covered calls out to be a little bit more complex than it really is. I think the hardest part is just accepting that the shares are at risk, especially when I think most strategy holders that are Bitcoiners are expecting this to you know, be $1,000 a share at some point between now and a year from now. Um, so in that sense, it might not make any sense to do this at all. But if you're, I don't know, 50, 60, 70, and you've already made all the money you're going to make in your life, and now it's about preservation, then, instead of going to your portfolio and saying, all right, I got to pay the mortgage, I got to sell, 10 shares or something, you can sell a covered call or, sell some covered calls. And if the price goes up, then you're forced to sell at a higher price than you were going to sell at anyway. Plus, you get to keep the premium. And if the price doesn't go above that, then you don't have to sell your position at all. You can just keep it. So, you know, it's not just for retired people, but it's fine to just treat it that way. Or, be kind of a sniper about the whole thing. Like if you sold covered calls twice in 2024, you could have done it in March and you could have done it in November and then just, skimmed a little off the top, right? You don't have to sell covered calls week to week, like I do. So I think I don't want to call it a cop out exactly. There might be a better word for it. but I will accept the argument that something like MSTY is like paying a convenience fee to let someone else do this for you. But saying that it's too complex, I think that's just a little bit of a cop out. It's like, oh, it's too hard to learn, I guess. But I did a couple of videos doing just speed runs. Like, look, this is how easy it is. Like, it was roll Friday, and I'm like, okay, here, click, roll, submit, click, roll, pick a strike, submit. And it just, I did all of the trades in like 30 minutes. And so it's really not as there's no secret frickin' sauce to it, really, I don't think. Let's see, said I meant IMST sold most of their covered calls last week. Oh, okay, yeah. I mean, I know they're a new fund. So if they only sold them last week and they're expiring a week or two away, then yeah, I'm gonna have to dig into their positions. You're welcome, Brandon. Dude Face, this week marks the first time I heard strategy and Michael Saylor mentioned on the Jimmy Dore show by Max Kaiser. Glowingly, I might add. So we are 1 or 2 degrees away from Saylor on Joe Rogan. That would be awesome. Saylor went on Lex Friedman. That was pretty good. I thought it was criminal that Lex has had fucking Vitalik on like 3 times. Like, ugh. Grokking Bitcoin, and that's the weird thing. Like, understanding Bitcoin doesn't really seem to have a one-to-one correlation with being intelligent. And I think Lex writes code and stuff, so he might just be impressed by someone's skill and intelligence in that area and is just overestimating the importance of the tech and underestimating the importance of the simplicity of the solution, I think. Let's see, Brandon. Memorize seed phrase. There are memorization tactics you can learn that make it very easy, such as making up a story about it. Yeah, I started to use that one, but then I wasn't sure because, like, if I memorize it, then someone can just $5 wrench attack me or somebody in my family, and I've got it memorized. But if I don't have it memorized, then I can't be forced to give someone my seed phrase that I don't know. So I'm not sure I even want to memorize it at this point. But yeah, I had my whole little memorization thing. I was starting to work on it and I kind of had it almost memorized and then I stopped. Let's see, taped it to the wall in front of the toilet to memorize every time I pooped. Now I repeat it to myself every time I take out the trash to keep it memorized. I also keep 2 different cold cards. Sounds good. Let's see, if you keep 2 cold card and memorize it, you have a 3-way redundancy. So is that multi-sig? Let's see, Dudeface. Josh Mandel said it was fine to leave your Bitcoin on an exchange. I think he was serious, but of course he is bullish Bitcoin, but says the exchanges need it for liquidity. I may be poorly paraphrasing here. Yeah, I think it's probably okay for some people. Like, I think we're gonna need enough people to self-custody to ensure sovereign liquidity. But if everybody has their shit on the exchanges, that might be a threat. But Josh is a high level thinker, so he might have a different angle than I'm even thinking about. Market Garden, the $5 wrench attack is a good attack. Isn't it a good thing to have it memorized to avoid it? Well, that's what I think memorizing it exposes you to the $5 wrench attack. If somebody, um, threatens my life and says, "Write down your seed phrase that you memorized," like, I'm not gonna let someone kill me just to avoid giving them my Bitcoin, right? That's the whole point of the $5 attack. But if you don't have it memorized, then they could torture you. They could torture you for days, and you can't give them something that you don't know. Not multi-sig, you just set the seed phrase in both cold cords, then both can access the same on-chain wallet. Okay. And then you'd store those in multiple locations, I suppose. Yeah. I haven't worked out all the game theory in my head about. So you know what? So let me go back to this Josh Mandel thing, he's talking about leaving it on the exchanges. So that puts you at a certain risk, right? So there's a guy that I listen to, completely unrelated to any of this stuff. It's called Psych Hacks, uh, Orion Taraban. And one of the things that he said was that sometimes the problem is the solution. And I won't go into I'll butcher it if I try to give the example that he gave. But in this scenario, I think an argument could be made that the problem might be the solution in the case of some people. I can't imagine having a ton of Bitcoin on an exchange. But let's just say that you thought that you had a problem because your Bitcoin was on an exchange. Well, now you have to find a solution to that problem. And now you have to, let's say you get cold storage, and now you have to safeguard that card, and you have to safeguard your passphrase, and you have to like take steps to make sure that you don't get $5 wrench attacked, and you have to make sure that you don't click on the wrong link and let someone get access to your computer and start keylogging. And you know you have to be savvy about not clicking the wrong links in your email. And you know are you getting older and you are not remembering things very well anymore, and you have, or you might be starting to get dementia and you can't even remember your kids names, let alone your fucking seed phrase. And so all of the solutions to that problem of having your coins on an exchange might just introduce more problems or bigger problems that you can't solve, or that are costing you quality of life by having to deal with them. And so for some people, the solution, the problem itself might just be the solution, because all of the solutions are a bigger headache than the freaking original problem. Um, my dad bought some and it's on the exchange, and he's like, I finally convinced him to get some, and he's like, but when I said it, he's like, when I bought it, they didn't, when I was setting up the account, they didn't give me a seed phrase or anything. I'm like, oh, it's on the exchange, you don't need it. They're managing it for you. And to an extent, at his age, that might work out better for him, to be completely honest. If, is it more likely that the exchange gets hacked before he does something dumb and loses his Bitcoin? I don't know. I don't know what the odds are on that. I don't know what Vegas's odds are on a 75-year-old losing their Bitcoin versus a hack. Let's see, not multi-sig. You just set the. Oh, we already talked about that. Store in different locations. Okay, excellent. Market Garden. You could always have some sort of dummy wallet with something really useless like ETH in it. Well, you want it to be too worthless. I wouldn't want it to be as worthless as ETH. Like, you wanna be able to, you wanna be able to pay off the $5 wrench squad attack with, I'd rather have the cash in somebody's wallet than fucking Ethereum. But I get your point. What's up, Kanal? Biggest problem with self-custody is coming to terms with the faults within human software and hardware and protecting against them. This takes a ton of self-awareness that I don't think many people have. Yeah, I think the young people are gonna be maybe a little luckier because they're just gonna have grown up with it. But yeah, like, um, I trade some options with my dad. I've been teaching him, and we've been doing it for months, and I still have to like every once in a while intervene, and he'll be like, "Hey, I tried to roll that call, but I wasn't able to get a fill, and the order's just sitting there because the liquidity wasn't great or something, and he's just got a pending order there." And I have to kind of, walk him through the steps and tell him where to click on the screen and, stuff like that. So saying that everyone is a perfect candidate for self-custody, I think is probably that's a little too much. Let's see. Yes, cold cards have the default wallets you can keep 10K in, and you have to input an additional password in an extra menu to unlock the main wallet. Yeah, but still, the $5 wrench attack is like, okay, put in your initial wallet, put in your next one, and you know, I'm assuming that the thieves are going to get more savvy too and be like, yeah, if they know that someone is a Bitcoin celebrity and it's clear that someone, even if you don't say, like I, and I'm not just saving this for the OPSEC, but I probably have way less Bitcoin than most people probably imagine that I might have, especially since I sold half of it to fund my options account. But you know, like any big time Bitcoin celebrity or influencer that you can think of, if you $5 wrench attack them and they're like, "Oh, here's my cold card. It only has point 0.5 Bitcoin on it." They'll be like, "Yeah, fucking right. I know this is just the visible wallet. Like the beatings will continue until you unlock the the hidden wallet." Um, there's gonna be some dumb, desperate ass criminals that aren't aware of this stuff, but a sophisticated $5 wrench attack, that's planned out like freaking Ocean's 11 is not gonna be fooled by that stuff. What's up, Grit? The dementia comments hurt. I feel attacked. Laughing. Yeah, I know. Let's see. If you get abducted, just give them the default wallet and say your wife spent all your money. Yeah, if they're married, they might be fooled by that one. But if they're single, they probably won't believe you. Let's see. By the way, thank you immensely for that Tasty Trade video. It was exactly what I was looking for. Excellent. I knew there was, and actually, that wasn't the one that I was thinking about. But I think Tasty Trade must be deleting old videos because there was a good Mike's board one. Um, and I really wanted the one that had the theta curve on it, but I just changed my search criteria a little bit, and I was able to find that one. So glad that worked out for you. Absolutely happy to do it. Market Garden, we've seen some home raid attacks on social media, clout chasers for years. The current generation, we're posting all sorts of screenshots and whatever, playing a dangerous game. Yeah, I think Colion Noir interviewed whoever that chick was that they tried to rob, and I guess her boyfriend or whatever ended up shooting it out with those guys. I think that's probably what we need a lot more of is we need a lot of these. criminals just getting fucking blasted, and maybe they'll start thinking twice. Well, then again, then they might just get more. Uh, they might just start getting more vicious with their attacks. But I guess they can only go so far, right? They can't kill you before they get the Bitcoin because then you won't be able to give it to them. But all right, let's minimize this. Let me just see if I actually have any trades to make today. I'm kind of doubt it because it's not like Strategy's doing anything crazy right now. Just reload that to get that out of my way. Let's see. Oh yeah, we can just start at the top. GameStop. So I sold the 26 put. It's still holding strong above 26. So is this Wednesday? It's only Tuesday. All right. So if I really wanted to push it, 2650 is available. If I really just liked manipulating my positions a lot, I could make the argument that I have already collected 67 cents of the dollar by Tuesday. And is it worth holding this for the rest of Tuesday, Wednesday, Thursday? Actually, okay, my bad. The market's closed on Friday. Somebody reminded me that yesterday. So really, this only has 2 days to expiration left, which would be, so this is about 1.5% return on capital for 2 trading days, 2.5 trading days. It's not bad. So I don't think I really need to close this now. If this was only worth like a nickel or maybe under 10 cents, it might be worth rolling this to the 2650 for an extra credit, right? I could roll it to the 2650 and get 50 cents. There we go. So that would be about 2% return on capital, right? I'd be putting up 2,600 in collateral for 50 bucks for 2 trading days. So that's pretty legit. If you prorate that out, that's like 4% for the week. Prorate that out for a year, that's like 200% returns in premium, right? Assuming that GameStop's price stayed at 26 for the next year. So I can make an argument for rolling this up to 2650 for a small credit or just leaving this alone. So I don't think this is really worth me screwing around with. The long calls that I bought, I'm basically waiting to print or, punch a lottery ticket if possible with this. I would consider selling one of the 2 for double. So I'm not really looking to move off of this now. It's got almost a year left on it. All right, the main position here. So when we pumped to like 300 plus, I think I had some 200 strike poor man's covered calls that I took off and went ahead and bought 100 shares. I was basically desperate for any excuse to remove some leverage because I have way too much leverage in this account. Like, it's not very smart, I don't think, really. And I'm just going to go over. So Tom Sosnoff from Tasty Trade said that, well, I heard him say 1% of your net liquid assets is what you want to target for your net theta. But then when he did the calculation, it was 0.1%. So unless I just did my math wrong, but he said on the if you have a $2,500 account, you'd want your net theta to be $2.50 a day, and that's moving the decimal place over 3 places, not 2. So 1% would be moving it over 2, unless I'm just thinking about this all wrong. But so I think yeah, I think this might be okay. This net theta of 500. It's either accurate based on his 0.1% comment, or it's off by a factor of 10 if it's really supposed to be 1%. But I think this is probably okay. So I'm happy not to really tweak these too much. All right, so the 325, I can, it's worth half of what I sold it for, so I could think about rolling this, but only about half of the time has taken place. So I only, I have to wait another 2 days to get the other half. So there's really no reason to roll this. If it was, if I was able to roll it for 50% of the what I sold it for in like a single trading day, that would make sense. But there's plenty of extrinsic value left in this one. So I will do nothing. And this is practically what I sold it for. So nothing to do there. Yeah, 30 days left, 30 days left. Not really ready to roll these. The call debit spreads, I probably don't even need to look at these until we get some kind of rally. Hard and fast would be nice. Yeah, it says I've got 3,900 in buying power, but 2,600 of that is collateralized with this cash secured put. I'm not sure why Tasty Trade doesn't hold that against me in this balance. I find that a little bit annoying. It makes me hard to figure out my positions. Um, I might have to message the chat and ask them why they do that. I'll report back if I find anything good. So I gave up hope on my Julys, didn't I? Yeah. I sold all the Julys already. And so now I am all my hopes and dreams lie on the Septembers and later now. And so I've got about another 67 days for some magic to happen before I roll these bad boys out. And let's see, the net theta is, let's see, 337, but that's for 50 of these. So divide by 100, that would be 337. But then double it because I only have 50. So I guess I'm losing about $6 a day on each of these. So I need the price of strategy to go up, enough to offset that $6. And since the delta on each of these is about 5, delta is the amount that the option price will go up or down based on a $1 move of the underlying. So every single day to offset the $6 that I'm losing to theta, I need the price of strategy to go up $1 approximately. Right? It's going to go down $6 and it'll go up $5 based on a $1 move. So every day that strategy doesn't go up $1, I lose 6 to theta. which is one reason why buying options is so much harder to manage than shares, because shares have no expiration date. But buying calls, you not only have to be right with the direction, right? If you're bullish, you need the price to go up, but you need it to go up faster than theta decay has taken place. And then, of course, I have some more longs down here that are even farther out. December, January. Tesla, 31 days left on the short call. It's getting close to being ready to roll. It's almost half of what I sold it for. If I wanted to get a little antsy, I could roll this out 2 weeks to 45 days. Oh, there's a little shortcut here. So Tasty Trade is telling me if I want to roll it to the same strike, I can roll it out for a $2 credit. It's not terrible. And that's right to the expected move as well. Maybe I'll wait another week, see what happens. And again, I've been using the premiums that I collect here to buy long calls with, hoping I can punch a lottery ticket here. Let's just take a look at the challenge account. I'm still getting my ass kicked on MSTY. Um, Strategy needs to pump to probably at least 350. And I don't really talk about it that much because it's just, this is just kind of like automatic. You know what? I wonder if I need to sign up for the drip program. I wonder if it's dripping no matter what I put this into. Huh. I know I got drip authorization for MSTY, but I don't know if I have to do that again for IMST. I'll have to check that out. But picked up IMST yesterday, 1,833 shares. I think it was around 90 grand. And so I'm running even Stevens probably, in one trading day. It's not going to diverge that much, but I'm still down. I don't know. I cut the challenge in half, so I was down 20 grand. I'm probably down 10 against MSTY. But some people, ask me how I'm doing and, how come I'm underperforming. And it really has nothing to do with the covered calls that I sold. It has everything to do with what I did with the premiums. Because with MSTY, they deliver the premiums, right? 10% premium. It's automatically reinvested into more MSTY shares. And it's like compound interest, because then I'm going to get a dividend paid on the extra shares, and then the next month I'm going to have even more shares. And unfortunately, I've been collecting premiums, right? So all of these covered calls, let's see, 10 covered calls for about 600. So that's like $6,000 that I collected selling these calls. Well, what did I do with those with that $6,000? Did I buy 20 shares of strategy? No. I didn't buy 20 shares of strategy. I bought these July 1080s. And since strategy's price has, well, it's only down 20% from, let's see, what is my cost basis? Okay, well, it says my cost basis for these 200 shares is 311, but that's only because I sold most of them and bought them back. So I've kind of been dollar cost averaging and distorting my cost basis here. But when I started buying shares, I can't remember if I had 3 or 400 initially. Strategy was actually at like 375. So even at current prices, I'm down 20% on my shares. When we were down to 250, I was down like, I don't know, 30, 40% off the original share price. Um, and that would have been fine if I was just like buying shares and dollar cost averaging into shares. But I started buying the 1080s. And when I started buying them, they were probably $1,000 a pop 80 days ago. And as I've been dollar cost averaging into them, I've gotten the price down to 755. I mean, I guess I could buy like, I could buy like 40 of them and get the cost basis down to like 375 or something. But, I'm only going to hold on to these for another 4 days. So I don't see the point. Um, so long story short, all of the premiums that I've collected here, like all of the covered calls that I've sold have done well. It's just that I've taken that cash and lit it on fire because I bought these 1080s and they've lost 90% of their value. So it's almost like I've been running the covered call strategy, but forgot to sell any covered calls the whole time because 90% of the value in the premiums that I collected is gone to almost zero. So um, the fact that I'm only down like 10 grand is kind of a miracle. It's kind of silly. And this is just the July 1080s. I already rolled the Junes for like, I don't know. I think I lost probably 20 grand on the Junes. So um, again, I've turned my hopes and dreams now to the Septembers. And if I don't, if continue to dollar cost average into these Septembers and these all expire worthless, then I have no chance of catching Misty, right? Uh, but if, we get a pump to 350 or something, then the price of all of these 1080s will double and, life will be good again. But if that if that never happens and strategy just continues to trade at 300 for the next 2 years straight, then I will just keep lighting my premiums on fire and I will never catch up. So it's not that my covered call strategy was bad. It's just what I have chosen to do with the premiums that I collected has been absolutely devastating uh, to my overall portfolio value. But can't take it back now. Oh, should I trade anything? Not really. Half the week left, half the premium left. Um, this one is, worth more than I sold it for. So this one, 38 days. This could go in the money. Um, and I'd have to make a decision. Do I let the 100 shares get called away? Or, if that were to happen, I suspect that these 300 strike ones would probably just become profitable all of a sudden, and I would end up maybe, selling 2 or 3 of these leveraged calls to buy back shares or to prevent these shares from getting called away. That's my plan. Alright, skipped over the allowance. Need to check this one real quick. But like I said, nothing's really happening too crazy with the price, so Yeah, 45 days left on this one. I just opened it yesterday. And just for fun, I decided to use my couple grand in buying power to sell a couple of Tesla put credit spreads, which is the bullish version. And let's see. I sold them for 200, I think. So I'm trying to buy it back for half. And so we're about halfway to half, right? I sold it for 2. It's worth about 145, and for my limit order to hit, I'll buy it back for a buck each, keeping 50% of the profits. And if that doesn't happen again, somewhere between 21 and 25 days to expiration, I would consider just closing it out for whatever I can, right? If the price is still 140, then maybe I just say, okay, fine. I'll take the $50 profit and then roll it out for maybe another, if I can roll it out and get another $2 credit, maybe I'll do that. But the um the management of these credit spreads is no different really than the covered calls stuff. All right, I think that's all of those. Let's check the 5K account. I'm guessing nothing to do here. Yeah, miners. There's a couple bucks left in these. But the premiums that I'm collecting is so small in these, it's not worth me rolling them early. Thursday, I will make Thursday or Monday, I'll make a decision on rolling out these performance covered calls. And again, I've got 2 of the 1080s for September that I'm hanging all my hopes and dreams on. No buying power. Yep. All right, let's check chats and then we'll call it a day. Kunal says, I think it would be interesting for you to wax poetic about how retirement via strategy options selling is going. Tell us about the hills and valleys. Oh yeah, it's been fine. Um, primarily, so this is the challenge account, so I haven't withdrawn any money from it. This is my allowance, and I'm trading pretty risky with this account. This one's a joint account that I set up. I'm really not trying to take anything out of this account. And then this is my IRA, so I probably won't touch that for quite a while. And so really we're talking about this account, which has the majority of my positions. And, for weeklies, I sold 6. And I mean, I guess I could make you do the math on this, but I think this account's worth probably half a million or something. And I didn't sell weeklies against, 100% of the portfolio, but even just on the 1,000 shares, right? So that's about 300 or 1,100 shares. That's worth about 340 grand. I sold 3 for 950. So that's about 1,000, and I sold 3 for 500. So the 6 covered calls, slightly out of the money, not capturing a lot of upside. These would be very similar probably to MSTY positions that they might take because they're really kind of after premium. And so even with just 6 covered calls, that's 1,500 a week, which is what, 75 grand a year? Paid taxes on that. Um, and then the other 5 I sold out to 45 days to expiration. So my expectation on being able to, you know, pocket some of this money is I usually divide it by 4, because if I'm gonna roll it every 2 weeks for half of what I sold it for, you gotta cut this in half and then half again to figure out your weekly profit. So the other 4 would probably be profiting about 300 a week. So that's another 1,500. So with current prices, these 11 covered calls is probably generating about 150,000 in annual, income, which is without paying taxes on that, that's more than I was making at my W-2 job. So just these 11 options can pretty much replace my, low six-figure job that I had. The rest of this is kind of gravy. Um, if I look at this poor man's covered call, I'm losing $100, right? Negative theta on the long calls, but I'm gaining twice as much as I'm losing on the short calls. I'm getting kind of wrecked on these. So this is barely breaking even for me right now because I chose poorly with these 300 strike longs. So I'm really not making or losing any money here. This is just treading water. And then all of the rest of these are just long. Like these are all just drags on my account. And if I wasn't like as bullish as I am on strategy, I just simply wouldn't have any of these positions. These would all be in shares, probably like another 1,000 shares or more. And I'd be selling covered calls against all of those positions. And really all I do is, um, if my checking account is getting low, then when I collect this, 6 grand or whatever, I just withdraw it from the account and send it to my checking account, pay bills. And if I don't have bills to pay or I'm all caught up and I want to, I collect this premium and I've got buying power, but no bills to pay, then I add to my stack. I'll buy more shares, I'll buy more long calls. And right now, with strategy at these prices, I can pretty much keep going and not really alter my lifestyle. If strategy dropped 50% from here, I probably wouldn't be able to be this aggressive with, buying long call positions, hoping to win the lottery. I'd probably just have to go into full covered call mode to generate enough, money to live off of so that I don't have to switch over to a frickin' Franks and beans out of a can. Um, and I think the hard part is, there's uncertainty in the market, so you don't really know what the value of your portfolio is gonna be to generate premium against it. But I think as a good starting place, I'd probably figure out how much money I need to live off of, figure out how much of a portfolio it would take to generate covered call premium against that, and then like quadruple it, assuming that my portfolio, in the event of some kind of black swan event and collapse by like 75%, then if my portfolio collapsed by 75% and I still have enough of a chunk left over to generate premiums to live off of, I think that's probably a fairly responsible uh, way to do it. But yeah, it's been it's been a little nerve-wracking because I quit in December at, strategy was at like 400 a share, and then it did almost collapse 50% from there, right? We went from all-time highs of like 500 to 250. So my portfolio didn't just shrink by 50% because I had all of these leveraged positions, right? These positions have collapsed by like 80, 90%. All the Junes got destroyed, all the Julys got destroyed. And so, um, yeah, that was a little bit nerve-wracking. Like, "Oh, yeah, I'm rich. I'm gonna quit my job." And when I say rich, like, not really that rich. Um, but yeah, since last March, my portfolio had, like, 9x'd from not March to November, and then now it's probably only back down to, like, between a 3 and a 4x since last year at this time. So, probably lost a little over half the value since November, unfortunately. So that was a little bit scary. I was like, "Oh shit, am I gonna have to dust off my resume and, like, see if I can get my old job back or something?" But yeah, that's part of the title of the video too, like, I do what I wanna do, and, it does feel good that for the most part, I feel like I won't do anything I don't wanna do for the rest of my life. If I don't wanna work at whatever, I don't have to. Like, I don't even have to, this time last year, I was working on account building, right? Trying to do the engagement, not really engagement farming, because that's kind of like a dishonest way to get followers, but try to game the algorithm a little bit. Like, okay, doing research, like, should I post at 9 a.m. or 10 a.m. and you know, how to get the most eyes on your posts and all of that shit, and thinking that X would be some small revenue stream in the future. And it feels good that I just don't have to bother with that. It wasn't something that I enjoyed, like trying to figure out what line of code in the X algorithm is gonna give my posts more visibility or whatever. It's kind of pain in the ass. So, um, so far so good. Um, just being able to create money with money is kind of cool. And if I didn't enjoy it, I guess I'd probably just load up on Misty or IMST. And, but, this is fun for me. So, as long as I enjoy screwing around in the market, you know, I'll do it. And really, I'll probably say something similar to this at the True North seminar that I'm gonna do at MSTR World. But if anybody's gone to the Fire Bitcoin calculator, you know what I mean? You can put in there, okay, I have 20 Bitcoin worth $2 million or whatever. And, can I retire taking out 10% a year if Bitcoin's CAGR is over a certain amount? And, that's assuming that if you have a certain amount of bills, you might have to go in and crack open your cold storage and sell zero point 0.1 Bitcoin for that month, right? That would add up to like 1.2 that year. But then the next year, Bitcoin's value goes up and you might only have to crack open 0.09 a month. And then the next year it's 0.08 a month. And the next year it's 0.07 a month. And so you really just never run out of Bitcoin, even spending the same amount of, money every year. And the way that I see covered calls is like, okay, well, if that makes sense, and I think it does, then what if you could sell a covered call against your Bitcoin that would allow you to, to pay the bills that you would have had to have paid by selling point one of your Bitcoin. And if the price never goes down or does go down or stays the same, you don't even have to sell the Bitcoin. You actually just keep the premiums that they paid you and just keep it moving. Your Bitcoin stack doesn't even go down. That's kind of the way I look at covered call selling as a retired person, is that if I wasn't selling covered calls and I had 10 grand worth of bills, I'd have to go out there and sell 30 shares. And as long as strategy goes up more than the value of my shares goes, um, as the number of shares goes down, then I could probably just live off of my shares forever. But instead, I can just sell some 310s or some 325s or some 375s, pay my bills with that money. And then if the price doesn't go up, then I don't have to sell those shares and I just keep all my shares. Howard says, thanks for the dementia comment. I feel seen. Don't worry. You'll forget how you felt and before you know it. Dude face, how do you want to trade against Yieldmax new bearish MSTR ETF WNTR, a poor man's covered put strategy? No, I don't. I'm not interested in that at all. Let's see what you said about the Bitcoin stack going down. This is what gives me pause about my cold stored BTC. As of now, I don't know how to make income off of it without handing it over to another custodian. Yeah, and that's going to be the problem. And so I think I'm on Jeff Booth's side, who he doesn't think that it's possible to safely generate yield on your Bitcoin. And his argument is that someone's going to offer um, a safe yield, and people will do that. And then the next company is the only way that they can offer higher yields and steal customers away from them is to, rehypothecate it or take bigger risks with the Bitcoin. And then company A either goes out of business and loses customers, or they give in and do riskier. And then another company comes in and they'll give even more interest, and everyone has to compete with them. And eventually, people get wrecked because whoever the Bitcoin got loaned out to doesn't pay it back, and then you're left holding an empty bag. Which is one reason why I don't apologize for cracking open my cold storage and selling half my Bitcoin and buying strategy with it, and then selling covered calls against it. If I had just put my entire net worth into Bitcoin in March, I wouldn't have been able to retire on Bitcoin alone. Using that fire calculator, it wasn't going to happen. So yeah, I at this point I certainly don't regret the decision. Anthony, listening in at 8:58 p.m. from Saudi Arabia. Give them my best. I actually don't think I've visited Saudi Arabia. We did United Arab Emirates, Kuwait, United Arab Emirates. We must have went like 8 times. That was our main refueling destination. I'm forgetting one though. Canal says, I am full Jeff Booth. Yeah, absolutely. He's, after listening to like 25 hours of Michael Saylor on Robert Breedlove's podcast, I was like, I know everything about Bitcoin. And that wasn't exactly true, but I found listening to other people get interviewed and talk about Bitcoin started to get a little boring because I was like, I'm not really getting much out of it, out of the new content. And then when I heard Jeff Booth, I was like, oh, okay, here's someone intelligent that has a very sophisticated view. And I started hearing some new things, and I'm trying to imagine or remember anything that he said in any interview where I was like, nah, it probably doesn't make sense. Like, I'm really, really trying to think about anything that he said that was like, nah, that ain't right. He's a pretty high level thinker. All right, Anthony, what happens if I get assigned and I only have poor man's covered calls, zero stock, while I owe a shit ton of money? Yeah, so if you probably don't want to let it get to that point, I'm assuming you are trading American options, and that's definitely a risk. So what's happening here, like let's just say these 250s. If so these 250s are still worth 12 grand a pop, right? If I exercise my long call to protect myself from the short call being exercised, I would be sacrificing all of the extrinsic time value. So I wouldn't get wrecked, right? But well, when I say I wouldn't get wrecked, it's not going to be like, okay, um, I'm an indentured servant now, but I would have lit that entire extrinsic value on fire. Sorry, and so 12 grand, some of that is intrinsic. All right, so let's calculate this. 250 strike is subtracted from the 310, that's $60. So if I subtract the $60 of intrinsic value from the option price, that leaves me with the extrinsic value. So there's 61.92 in extrinsic value in this option. That would be the part that I would be lighting on fire. Because if I exercise this call right now, that means I got to pay 25 grand for it, right? The strike price. But it's worth more than that. It's worth 31,000. So I would be up 6 grand, right? So that would be how much I would make from exercising this option right now, 6 grand. But if I just sell the option, I can sell it for 12. So why would I exercise this, make $6,000 when I can just sell this option for 12? And so that's the problem. If the buyer of your short call exercises this $400 option, and the only reason I can imagine that they would do that would be if the price went to like, 450, 500, right? If that happens to you and you are forced to exercise your calls at your strike, it's gonna be fine because the shares are worth $500 a pop. And so you're going to have to deliver 100 shares to the buyer, right? You don't have 100 shares. So you exercise your 250 and you're going to be out 25 grand, right? That's going to be offset by the 40 grand that you're going to get paid for them buying your shares at $400 a share. They're happy because now they've got 100 shares of strategy worth 500 that they only paid 400 for. But so you're still protected, right? So you're going to buy 100 shares for 25. You're going to turn around and sell them to um, the short strike holder that exercised on you, you're going to turn around and sell those for 40. So you're going to keep the 15. So you're still fine. And that's why this is a defined risk trade. But that's assuming that you constructed this properly, right? If you did something like, you sold the 260 strike. Well, if the price goes above the 260 and you exercise the 250 and you're like, oh, well, that's fine because I can buy it for 250, sell it to this guy for 260, and I'll keep I'll keep the $1,000 profit. Okay, that's fine. But you paid $12,000 for the option. So you would actually lose 11 grand. So that's why it's very important to select a short strike that, if exercised, the difference between the short strike and the long strike is enough for you to recoup the value of the long call that you bought in the first place. Let me reread the question and see if I answered it. What happens if I get assigned and I only have a poor man's covered call, zero stock? Will I owe a shit ton of money? Yeah. So if you constructed it poorly, if you did not sell, if you sold a too aggressive of a strike that's too low, then you could get fucked. Just in general. But in any case, if you are forced to exercise early, then you will be sacrificing. You can add to your list of losses all of the extrinsic value in this long call. So this long call is guaranteeing that you don't get bent over, with infinite losses if you are forced to exercise your option early to protect yourself from the option that they exercised. You will lose all of the extrinsic value here. So best case scenario is, if you're given a chance, I would go ahead. Like if you thought that there was any risk whatsoever of getting your shares called away, and I've only been exercised like a day or two prior to expiration, so it's not very common to get exercised on early. So if I was at all worried about that, I would just close the two positions together instead of, waiting till expiration day. Right. So like on these, if it was like 2 or 3 days to expiration left and strategies at like 500 a share, I might just close these positions together, in a balanced way to try to, make sure that I don't get exercised on. But even if they did exercise on me and it's very close to expiration, now I don't have to worry about losing all of that extrinsic value because with a day or two left to expiration, there is barely an extrinsic value left anyway. So the real danger to losing money on these long calls is if you get exercised on very early, because there's, 6 grand of extrinsic value left in this option, which is a little bit of a risk. I hope I answered that question. All right, so we're all caught up on the chats. Appreciate everybody tuning in. Be good, John. Oh, I guess I will. I'm gonna do a Spaces 4 p.m. ish Eastern Standard Time on Thursday with Hermes Lux. He's the 10 Delta King, so that'll be fun. He was an Army guy too, so maybe we'll talk about some military stuff. Let's see, Anthony. Thanks, man. I have deep in the money with a 145 strike. Sold the 360s expiring May 23rd. So, okay, so you sold the 360s. So the difference between 360 and the 145 is 215. So that should be fine. Here's the I use the calculation from this website. I think this is very good. It's this here. If you take the short strike minus the leap strike, add the call premium that you got paid, that should be greater than the cost of your leaps option. And so I think you're fine there. It's much easier when you buy them very deep in the money, like you bought. You know, the 145 strikes are very deep. So it makes it very easy to buy, or excuse me, to choose a good covered call strike. Oh, so what I should really be looking at is what's the value of the yes, the 360. You got paid 1400 ish, maybe. Um, yeah, I need to know the expiration date on your 145 strike, but you're probably good to go as long as it's you know out to like September or December ish. You're probably fine. Should be way good using the blue collar investor you've preached. Thanks again for your military and option service. You're welcome. Glad to.